Good evening and welcome to another episode of the Weekly Market Wrap. My name is Daniel Ang, and today, of course, is March 16, 2025. And for the year 2025, there are a total of 52 weeks. We are into the 11th week of this year. So we can see that we are currently in the middle of March, and a lot of things has actually happened. And we will continue with the series. Now, let me know if you can hear and see me. If you can, just type yes into the chat so that I know that you can see and hear me. Are you guys able to hear and see me? If you can, I would appreciate if some of you can actually type yes into the chat box so that I can get some response from you. Okay, I see some emotion coming up. Thank you very much. Anyway, if you have any questions along the way, do remember to type your question into the Q&A or into the chat box so I can address your concern as we go along. Now, of course, before we start the presentation proper, I'd like to make some announcements in the sense that this presentation, as you guys who have been following me for quite some time, is aware that this presentation is sponsored by none other than IronFX, a broker that is based out in Cyprus that has operations in 180 countries, and they have been a value sponsor in my events. And last weekend, of course, for those who show up in Kuala Lumpur, we had a physical event, the first of the series in this year, and we hope to do more as we progresses through the year. And for those who have came for the session itself, I hope you have a valuable time in which I share with you my views of what Trump's various policy is going to how it's going to impact the market. And I hope you get something, you actually manage to learn something along the way. And for those who did not show up or who have other engagement, just be aware that there will be other events, physical event very similar to the one that we just held in Kuala Lumpur. And if you are keen, just watch out for the announcements. Maybe we will do it once every quarter or so. Okay. So before we again go into the content proper, I would like to also make sure that you are aware that this presentation is not an offer to buy or sell any kind of securities, be it FX, CFDs, or any kind of margin financial products. And the trading of any kind of financial products on a margin basis is definitely a risky proposition. Just to understand that there will be risk involved. And I'll be sharing with you my views on the various markets in the second half of this presentation. And just be aware those are my opinions and has got nothing to do with the sponsor IronFX, and the content of which has not been vetted by any regulatory body. So also be aware of this before we proceed. Now, let me see the couple of questions here. Thank you very much. Thank you, thank you, thank you. The chat box is disabled. Okay, thank you very much, Tanvi. Oh, you're supposed to show up, but you didn't show up. Anyway, let's get started. I wasn't able to do a weekly webinar the last Sunday because the timing was a little bit tight, and I do apologize for that. And we hope to be able to compensate with today's presentation. Now, in the beginning of the week, is that every week from now onwards, we will also have a series called Trump This Week, because this character has been proven to be very disruptive. Anything that he says or do will definitely have a immediate impact on various financial markets. And this past week itself, in the middle of the week, he actually or what he mentioned the week before in terms of imposing a 25% tariff on steel and aluminum finally begins at the middle of the week. And the immediate reaction has been swift. We get Canada, which export a lot of steel and aluminum into the United States. Obviously, is going to be the most obvious victim of this imposition of 25% tariff on steel and aluminum. And of course, the EU is also retaliating based on what they have been doing or what they have been announcing in the impact of this 25% tariff on steel and aluminum. And they did retaliate, and they are proposing a 50% tax on American whiskey. So the very next day, on the 13th of March, on Thursday, Trump actually returned fire, threatening to impose a 200% tariff on European wines, champagne, and spirit. And this will be what we call the retaliatory tariff, which Trump is making to be the centerpiece of his tariff policy. So what he's trying to say that he's going to impose tariff on all their trading partners, and anybody or any country that actually retaliate against his initial tariff imposition will be slapped with an automatic retaliatory tariff, and this will escalate to the point whereby something will have to give, right? So I think Trump uh, policy on tariff is very, very simple. He believes because the America is the largest consumer markets, everybody wants to sell something to the Americans, and he feels that they only have two choices to react in reaction to his tariff policy. Either they swallow their pride and accept the tariff and pay up, or if they retaliate, as we can see in these cases where we have Canada and EU, and of course on top of that we have China retaliating against Trump's tariff policy. Trump will immediately escalate it by imposing even higher tariff in response. And the only country that has yet to respond so far has been Mexico. And Mexico has been keeping the cards very close to the chest. And Trump has actually rewarded them by not imposing additional tariffs. Okay, so we will have to see what happens. In fact, Trump has gone as far as to give Mexico another month, okay, of what you call free play, okay, before any further escalation in the tariff war. Okay, so right now we have a situation in which Trump saw the retaliation against his initial tariff. Now he has escalate the tariff war by imposing a ridiculous amount of tariff in retaliation, and the hope is that nations that have been subject of tariff will not retaliate, and this has not been playing out the way he has envisaged, and this is creating a lot of unease among consumers the world over, and this has also led to the continued weakness in US equity markets. So he, for one, has been asked what if this tariff war will lead to a recession in the States. And Trump has been very sanguine in the sense that he did not rule out a possibility of a recession. He just said that he is not in the habit of thinking about such nasty events. But obviously, the market is behaving as such that this continuation of this tick for tack and eye for an eye is definitely going to lead to a global recession. This is a very real possibility because it looks like countries have, especially China, has learned their lessons, and they are very much ready for Trump 2.0. So everything that Trump has been imposing on China, China come back with very focused measures to get back at the Americans. Okay, so this is definitely a situation we have to be very, very well aware of going into 2025, because this thing is definitely going to be not a good thing. Okay, as we can see in the performance of Wall Street itself. Now, the first economic data that came out this past week has been the consumer price index in China. We can see the price has actually dipped back. Okay, we can see that there was a surge in consumer prices leading into January. We can see January saw a bump up of 0.5% from 0.1. So there was a fourfold increase in the prices of consumer goods, but this has been quickly unwind. In the following month, in February, we can see year on year that was back to negative 0.7. So what does this tell us? The 0.5% increase in CPI that we saw in January is possibly a what we call a getting ahead of the game, because everybody knew what Trump is going to do once he gets into the White House. And from December last year to January of this year, there has been a lot of people buying up stuff just to stock up, because they know once the trade war goes into full force upon the return of Donald Trump, things were going to get very bad. So we can see the reaction possibly in February has saw a total dry up in consumer demands in China. So I think this is going to be quite universal when we look at CPI numbers across the various major economic bloc. But China one, it has been quite startling. We can see that this is very, very close to the worst number that we saw back in January of last year. So last year, the worst number that we saw in the CPI, in the headline CPI, was negative 0.8. So now we start the second month of 2025 with negative 0.7. So this is pointing to the possibility that consumers are definitely holding back everywhere in terms of their spending patterns. So this is not going to be a good sign, because if consumers stop spending, it will lead to less demand overall. And this is definitely not something that we want to see, okay? And this is the background story. CPI numbers in China fell for the first time in 13 months. And on a month-on-month basis, it fell only 0.2 from the January whopping 11-month top of 0.7. So we can see that meantime, China has been holding back their response to the United States tariff. I think they are still waiting for more what else Trump is going to do before they respond. And of course, we knew last week the Chinese government has a internal meeting, and definitely the communique that came out of that meeting has not been good. Because China now openly says that China is ready to respond to any kind of trade war, be it trade war or any kind of technology war, or even they don't rule out any kind of war. So what the market interpret this statement is that China is also prepared for a hot war if the United States so wish to have one. So this has been a hardening of rhetoric among the two biggest economy in the world, and definitely this is causing a lot of concern. Will 2025 be a year in which the war that we saw that has been raging in various parts of the world will actually escalate? I think that there's a very good chance that may be the case. Although right now there has been a lot of work and a lot of news surrounding a talk of a ceasefire in Ukraine, but based on the rhetoric that we see, I think they are practically talking over each other's head. For one, Ukraine has already said that they must be involved in any kind of negotiation for peace, any kind of peace proposal without the participation is not practical. They want to be involved, and they, for Ukraine, they will not want to give up any territory to Russia, even though they have lost certain land to Russia during this 3 years fight. And they definitely want to join NATO, which is something that Russia will not agree. In fact, Russia will not even agree to a ceasefire and for the for European troops to be stationed in Ukraine to oversee the peacekeeping. Okay, Russia have ruled that out categorically, and that will not happen. But they are still talking about a ceasefire, and Russia do not necessarily look at a ceasefire as being beneficial to them. They fear that the 30-day ceasefire will allow Ukraine to regroup, okay, to rearm, and that's something that they are not willing to discuss. But I think there has been a softening of attitude. Putin, on his part, said he is open to a 30-day ceasefire, provided the root cause are being tackled. And the root cause, obviously, is that Ukraine have to give up all the land that they have lost to Russia, including Crimea, and they cannot, they got to maintain neutrality. They cannot join NATO, and there will be no European troops going to be stationed in Ukraine in any role. Okay, so basically we would have to watch how this thing unfold, but from what I can see so far, it is highly unlikely that we're going to get a peace deal going anytime soon. Okay, so we would have to brace ourselves for some very hairy movements in the months ahead. And in Japan, we have the GDP numbers came in very strong for Q3 Q4, and but that was again a touch lower than what we were expecting. Market was expecting a 0.7% for Q4 of 2024, but came in at 0.6. It is still a good number. The one thing that we also have to also watch was the revision. Previous Q3 was at 0.4%. It was revised down to 0.3. But overall, that means that the Japanese economy seems to be holding up pretty well. And that would also allow the Bank of Japan to actually hike interest rates if they so wish. The market is already resigned to the idea that the Bank of Japan will actually start to hike interest rates this year. So how much will be the question as to the quantum of any kind of rate hikes? Here we have the background story. We can see Japan has also cut its estimate for the last quarter of last year to 2.2% on an annual basis from 2.8%. So we can also see that consumers in Japan is also trying to tighten their wallets. So we can see that there is also the concern that this war between the major trading blocs is definitely not a good development. And Japan itself is not necessarily going to be able to escape Trump's tariff. Okay, and that is as clear as we can see from the attempt by the Japanese Prime Minister to be among the very first dignitary to actually visit Donald Trump after his inauguration in January. In fact, the Japanese Prime Minister was the second foreign dignitary to visit him in White House after Zelensky of Ukraine. And we can see that this is the third straight quarter of expansion. Definitely, this is telling us that the Japanese economy is, at least for now, looking pretty good. Okay, on a quarter-on-quarter basis, that has been seasonally adjusted to 0.6%. Okay, now we want to see is this a sign that the deflation phase that Japan has been faced with is over? And if that's the case, definitely the market is preparing for more rate hikes, and that will mean the Japanese yen may be strong relative to the dollar. But again, we have already seen how the Japan dollar yen has actually came off, but I think it's getting ready to rebound. Okay. Here in the CPI numbers for United States, we can see on a month-over-month number, which is the graph on the left, you can see that the number has actually come off from 0.5% to 0.2%, and then the core CPI month over month has also eased from 0.4 to 0.2%. So that is telling us immediately prices are coming down. This is a very similar picture that we are seeing, like what we saw in the Chinese CPI numbers. There was a bump up in January, and you can see the CPI numbers crashing in the month of February. Again, this is very similar to what I mentioned earlier on. There was this expectation of a tariff coming upon the return of Donald Trump, and we can see consumers has actually been stocking up before his return, and right after that, we can see the month of February saw a total reversal in the CPI numbers. This is pointing to a fact that prices are definitely probably heading lower. Okay, but again, we would have to see how the impact of this tick for tack and eye for an eye retaliation, because consumers do not know how the other countries will react. But now they're beginning to see a picture emerging in which countries like Canada and the EU are not lying down. They definitely are fighting back. But will that lead to some kind of negotiated settlement, like what many expect to be happening in Mexico, okay, between Mexico and the United States? Here we can see year-over-year number has also dipped from 3.0% to 2.8%. And of course, the core CPI numbers year-over-year has also dipped from 3.3 to 3.1%. Both are showing us that prices are coming down after the bump up in January, okay? Here we can see the CPI slowed down in February. Consumer prices increased less than expected, so the market did react based on this. Now the market is expecting the Federal Reserve to actually cut interest rates, okay, because inflation is coming back down again, unlike what we saw in January. So this has reason hoped that the Federal Reserve may eventually consider cutting interest rates. Will there be such a case? Because at the end of the day, we knew what Donald Trump wants. He wants a lower dollar. He wants lower interest rates because the the interest burden on servicing the humongous national debt has become unbearable. He needs to bring down the dollar value so that he doesn't have to be stuck with a high interest expense on servicing the national debt. Okay, so this is what Donald Trump wants. Will he get what he wants? And of course, the other possibility is that we knew that the chairman of the Federal Reserve has been very clear. He is not going to be swayed by the president demanding a lower interest rates. He's looking at the data, and unless the CPI suggests that prices are coming down, he definitely will not be in a mood to actually cut interest rates, because doing so will actually inflame inflation all over again. Okay, right now his focus is on inflation. But I think there is another possibility here is that Trump, when asked whether he is worried about the tariff war leading to a recession in the United States, he remains uncommittal. He said there will be some pain to pay, but he said it's going to be all worth it. So I think in he's understand that his action on the tariff front will definitely cause some kind of disturbances in the domestic economy, and of course the world beyond United States will also get the blunt of it. That means markets are going to be very volatile depending on how Donald Trump reacts to all this retaliation from his initial tariff. Okay, so what we can see is that more will be coming because the EU definitely is not going to take this lying down, and the UK is also not able to escape the raft. So is Australia. So the world over, we are beginning to see the spillover effect of that terror war, not necessarily happening on their shore, but it will definitely be coming. Okay, so here, uh, markets are expecting over the next few months, if this thing continue tick for tack, it will definitely lead to an escalation, and prices are definitely going to cost a lot more because material-wise, input cost is definitely going to increase. Okay, so we will have to see how this thing pans out. Now, over in Canada at midweek, we have the Bank of Canada actually cutting interest rate one more time, and the current rate is at 2.75%. Now, this is one of the lowest we can see the interest rate in Canada. They started cutting rates in in June of last year, and for the last 8 months, prices has been coming down, interest rate has been coming down, and it looks like this is a trend. Okay. So this is the background story. This is the seventh consecutive cut by the BOC. Currently, interest rate in Canada stands at 2.75%. And we will again have to watch how this tariff war is going to pan out between Canada and the United States. Incidentally, Canada have a new prime minister. His name is Carney, and he used to be the what you call that? He used to be the governor of the Bank of England. So this guy is somebody who knows what he does. Okay, so definitely he's currently in Europe and is currently meeting with French President Macron, and next he will be going over to meet the UK Prime Minister, and we will have to see how they are going to rally and deliver a common front to Donald Trump, and says that beside looking at the tariff, they are also very concerned to present a common front in terms of the situation in Ukraine. Europe, for one, is definitely not in favor of a peace deal in Ukraine. And they say that they are prepared to send in troops, especially the BRICS have already said that they are prepared to send in troops into Ukraine upon any kind of peace deal. And that has been practically been ruled out by the Russian President Putin. So again, for the first time, the major players in NATO seems to be going in different direction, with Donald Trump wanting to disengage, and with the rest of NATO in Europe wanting to escalate the war in Ukraine. Okay, so this will definitely weigh on markets. Will the war continue to rage? Personally, I think the war will not see any kind of slowdown. In fact, I think we may have not seen the worst of it just yet. Okay, so Germany for another. Now we have the new chancellor already managed to sway the Green Party to actually increase the budget for spending, in not only to go into deficit spending. This is something very unusual for Germany, because since World War II, we knew that Germany has been very stringent in terms of keeping fiscal discipline. They have been watching their budget very, very closely to try not to overspend. But now they look at the situation with a major deindustrialization going on in Germany, and the war in Ukraine not necessarily going in their favor. Germany, for the first time after the Second World War, is increasing their defense budget, and that has caused the DAX to actually rally to new high on the basis that all this defense spending is going to rejuvenate the economy. Okay, we also get reports that Volkswagen's production line has been slowly being converted to produce weapons. Okay, and this is something that we have to watch, because it has not happened since the end of World War II. Now, the other number that came in, which everybody was waiting for, was actually these PPI numbers coming up from the States. And they also have a very similar structure, in which we can see the peak actually happening in December last year. And so far, 2 months into 2025, we have seen the input cost, as far as producers are concerned, has been coming down and currently stands at 3.4%. So this is the background news. Producer price are unexpectedly unchanged on a headline basis, and this again will be subject to how the tariff war is being played out. So we still have to watch out for any kind of adverse reaction in the war happening on the tariff front. Okay, so for now, but markets are expecting the Federal Reserve to resume cutting interest rate as early as June. Okay, so the date for the first rate cut for 2025 is likely to be happening in June. Now, this coming week, we're going to have the FOMC. So do watch out for that. But nobody expect the Fed to actually do anything substantial. I think they will keep the rates unchanged for a time being. So this is Germany harmonized index consumer prices. We are also seeing for the month of March, and this is even more current. We can see that after staying stable and at 2.8%, it has come down to 2.6%. So this is the latest reading as far as this number is concerned. Remember, the number coming up for CPI for China and for the United States are all for the month of February. So here we have a reading for the month of March, and it's coming in from Germany, and that is pointing in the right direction, in which prices seems to be easing a little bit. Okay, so Michigan Consumer Index, and this one is bad. Okay, we can see that consumers is not very confident about their immediate future. We can see the index is among the lowest we have ever seen, okay, at 57.9. This is one of the lowest reading that we have seen in recent times. So this is a reflection of the lack of confidence among consumers, and this is going to be worrying, because if consumers are worried, they tend to tighten their belt, and it will hit retail sales, it will hit consumer spending, and that will mean a lower GDP for Q1 this year. Okay, so let's watch out for this number, or at least for the Q1 GDP numbers. Consumer price index has dipped, signaling caution. We can see that this is significant because it has taken analysts by surprise. Okay, market was expecting something above 60. It came in at 57.9. This is a major shift in consumer sentiments, meaning to say that US consumers are definitely not as confident as they were. Okay, so this will have impact in the dollar rate. Okay, it will means that the dollar will also be weakening in the immediate aftermath of this revelation that US consumers are now more cautious about their spending. Okay, so in the week that comes, we can see that it's going to be on a relatively quiet week, except for the FOMC, which nobody expects a major change in their monetary policy. On Monday, we have the numbers coming up from China. We have industrial production expecting to see a dip, and this is quite logical, because they are all waiting for development on the tariff front, and this has definitely impact the factory floor production. Okay, retail sales happily looks to be doing okay. They are expecting a positive increment in their retail sales for the month of February from 3.7 to 4%. And retail sales for United States expected to surge. Okay, this is in response to the January number. We will have to see whether this number will actually turn out to be so positive, because from a negative 0.9, now the market is expecting 0.7 positive, which is a big swing to the upside. I'm not sure whether this is sustainable or even realistic. We will have to see. So on Monday, which is tomorrow, this number here will actually move markets, because if it moves too far away from expectation, or if it comes in below expectation, definitely the stock market is going to take a hit. Okay. And on Tuesday on Canada, we can see that the consumer price index, no estimate here, and likewise for both index for the Bank of Canada as well as the headline numbers, there was no estimate. We will have to wait for the number to be released on Tuesday. At midweek on Wednesday, we are going to hear from the Bank of Japan. Again, no surprise here. Market do not expect the Bank of Japan to move on the interest rate front. I think they will be also moving, maybe looking towards the Federal Reserve for direction. Okay. Then of course we have the all important FOMC. Again, nothing unusual likely to happen on that on the early morning hours of Thursday. Okay, so this will be the first FOMC after the daylight saving has gone back, has resumed for since last week. In New Zealand, we have the GDP numbers for Q4. Expect a very bad number. Okay, previous number was negative 0.3. Now they expect a whole percentage worse than the Q3 numbers. So if this number come in anywhere near negative 1.4, the market is going to react negatively in Canada, in New Zealand. Australia is going to see their regular employment numbers. We expect the numbers of people employed in Australia to take a hit from 44,000 to 30,000. Unemployment rate likely to stay unchanged at 4.1%. And then, of course, we're going to have UK, no estimates whatsoever. And then we come to the Bank of England interest rate decision. Again, no change is expected. So on a relative basis, other than retail sales on Monday for United States, and that what we call that GDP estimates for New Zealand, the market is going to be relatively quiet. Okay, but watch out for Monday. I think we will be seeing some kind of fireworks as far as the retail sales in the States is concerned, because the expectation relative to the previous known number is a little bit wide. Okay, so do expect some kind of firework. Any question for me? If you have, do remember to pump them into the Q&A. Now, this will come to the segment in which I'll be sharing you my view of the various markets. Let me change that for you. Oopsie, I don't see it happening here. Hang on. Okay, I have to change this. All right, let me know if you are able to see my chart here. Hopefully you can see my chart. Again, I will, as usual, start off with the Dow Jones. Now here you can see Dow Jones has taken a hit this past week, and it seems to have been accelerating except for a bounce on Friday. So again, we will start off on the weekly time frame to give you a sense of how the market has been reacting. Now this is the weekly time frame for the Dow Jones. You can see that we have a three-wave pullback, okay? And this three-wave pullback appears to be accelerating to the downside. So when we go to the daily time frame, I'll show you whether he has actually overshoot the equality level. It does look like he has overshot, okay, but for time being, this pullback from the all-time high at 45,078 is still likely to be a corrective move of a very, very bullish market. Okay, overall we can see that the Dow Jones, despite the bad beginning this year, has been overall in a very bullish mode. Okay, so I do expect further consolidation, and whether it will lead to a more severe sell-off, I think we will have to be mentally prepared for it, because after such a major bull market over the last few years that we've seen, this market right now is beginning to have a bit of consolidation. I think it's healthy for the overall bullish case. I've always maintained that this bull market is by no means over. So what we are seeing here in terms of a decline on Wall Street can only be for a time being be seen as a corrective move. Okay, so at some point in time, the market should stabilize and a new catalyst will emerge that may cause the stock market to go to all-time high. Okay, to fresh all-time high, which I think is likely to be the case until I see otherwise. This will be my overall case. Okay, now let me show you the daily time frame. Now, this is the daily time frame. You can see that this move, this past couple of weeks has been very, very sharp. The market went up to a low of 40,652. Okay, this is a very long, very far away from 45,000, right? So we can see that the market has dropped something like 5,000 points over a span of what, 2 months, and this appear to be accelerating. You can see this angle in which the market has been coming off look a little bit steep. Okay, it does not have the 1 day massive bull climb down, but it has been coming down very steadily over the course of the February, and now in March, we seems to be accelerating. So Friday, we have a bit of a bounce, but this bounce is a little bit too premature to conclude that the low is in place. Overall, I think we will have to take our cue from the daily time frame because a weekly time frame is not going to be of much use to us because it won't tell us a lot. Now, earlier on, I did mention whether this pullback from the all-time high has it overshot its equality. So based on what we have seen so far, okay, we have equality. Then by a little bit, we can see that the ideal price in which this thing is going to pulling back from 45,078 to 41,713 back to 45,061 should either end somewhere between 40,900 to 41,700. It's overshot by a little bit, okay, to 40,652, and now we are bouncing. So technically speaking, this is a corrective move, which appears to be so far quite symmetrical in the sense that it is equality. Yes, the market has overshot by a little bit, but it is to be expected. Okay, so unless we see prices starting to reverse below 40,652, I think there is going to be the likelihood near term we probably will see a bit of a bounce. Okay, so for now, I think a temporary low may be in place as of last Thursday bottom at 40,652 in the Dow Jones. So expect a bit of a bounce going on, but this bounce may unfold as a more complex corrective pattern for all we know. So long as this low here at 37,232 is not taken out, the bullish case remains very much intact. Okay, so for the bullish case to remain intact and for the return of the bull, the market would have to take out the high of 45,000, which is for a time being looks a little bit impossible. Okay, so what may be more likely to be the case will be a period of further consolidation with a little bit of bias to the upside. Okay, near-term bounce, but overall we are still seeing the unfolding of a corrective pattern. Could it end up as a more complex corrective pattern? Obviously, we cannot say no. Okay, but okay, I am going to see this as part of corrective move and looking for levels to buy. Okay, for a time being, I think there's a possibility that last Thursday low could actually provide a little bit of support for now. Okay, on the 4 hours time frame, let's take a look at the 4 hours. We are beginning to see a bit of a buyer coming in. Okay, but near term, we will have to watch this level at 43,300. This level is going to form the immediate top for this move. Unless this is taken out, there is very high possibility it will be swinging anywhere from 40,500 to 43,300. So it's going to be a wide range of trading. Anytime the market goes into 43,800 and seems to be appears to be capped, then that could be offering us another area to re-engage the market on the short side for those who want to trade counter trend. Okay, but remember to put a stop at least 43,300. Okay, so to make sure that we don't be caught flat-footed if the market should actually reverse higher. There's one question here. I think it's a new question. Let me see what is this. Lily is asking, how do we see China and Hong Kong market? Will it continue its rally without significant rest in the first half of March? Like I said, the tech story, the AI story has shifted from Nasdaq to the Hong Kong tech stocks. Okay, so we have seen Hong Kong market has been very, very strong, largely because the tech stocks in China is benefiting from all the dramas regarding a lot of tech startup, including key players like Alibaba and Tencent coming out with a AI agent, for example. The latest one is called Mangus, and that one has been again lighting a fire under Chinese tech stocks. So for time being, unless the story changes or the trade war becomes even more aggressive, I think there is reason to believe that the buyers that are into Chinese tech stocks will continue to be holding the market up in both Hong Kong and China. Okay, again, as much as the economy is concerned, we don't see much improvement in Chinese economy. This is a story of tech stocks from AI, from the story of NVIDIA. Now it's all about all these Chinese AI agent that are doing a much better job at taking the AI story forward. Okay, hopefully you can see what I'm seeing here in the sense that this market may actually bounce a little bit, okay, but it will have to be a lot more before the market can change direction. Again, looking at the 4 hours time frame, 42,000 on 43,300 seems to be the line in the sand. Unless that level is taken out and market close beyond that level, then we will still be looking at further consolidation in the US equity markets as far as the Dow is concerned. Now we move on to the S&P 500. The S&P 500 has also been one of the major player. We can see that the sell-off is actually more recent. You can see that the high is 6,147, and despite the Dow Jones do not have new high for this year, we can see that the S&P 500 do have a new high going into 2025, and that happens to be last month in February. We can see the market since has been coming down, and this could be the last ditch effort to take the market into a new high. You can see that the high traded at 6,147.2 was only marginally higher than the week before the all-time high. And the way it closed, you can see that this is definitely a move, okay, to it's more like a bull trap to take to those to actually make a false move to entrap those people who buy on breakout of new high. So now when the market come off, it comes off very, very steeply. So for the last 3 weeks since the all-time high, we can see that market has basically been trading lower. And so overall, we can see that the market is still very bullish. So it does not necessarily change the outlook in the longer term. Okay, the longer term picture remains very, very bullish for the Wall Street. Okay, so in the daily time frame, we are also beginning to see how steep the pullback has been. It has been very, very steep. Okay, so we can see the low traded this past week on Thursday was 5,503.7, and if we depend on the daily time frame, the key area to watch will be this level at 5,090, for example. Okay, 5,089.3 is the low, and this is my point of invalidation. If the price ever trade below here and God forbid to close below this level, then that will be the threat to the story about this bull market being over at will get stronger. Okay, so this is a very, very different story from the chart that we saw on Dow Jones. On the daily time frame, we don't see the price anywhere near the point of invalidation, but in the S&P 500, it is uncomfortably near. Once the price gets into this blue colored area, anywhere between 5,090 to 5,315, it is something that we want to watch. Okay, if the continued sell-off accelerate below this level at 5,089.3, then the medium-term outlook for the S&P 500 will turn decidedly bearish. Okay, so here the key to watch is actually a lot nearer than what we saw in the Dow Jones. Okay, so we've got to use the S&P 500 as a cue to see whether the overall health in the bull market is going to be negatively impacted. Here we take a look at the 4 hours. 4 hours also show signs that the market have a bit of a bounce, but this bounce is again premature. Anytime the market takes out 5,704, okay, no, sorry, 5,781.8. Okay, let's put it at 5,782. Unless the price sticks out this level here, the overall decline in the S&P 500 may continue for a little while longer because it does not have any significant bounce yet, just yet. Okay, so by looking at the overall picture, I think we still would have to get used to an extended period of consolidation. Increased volatility, that is something to be given, but by and large, I think this market is going to be in for a wild ride. In the Nasdaq, we can see the impact has been quite wide. We can see that in the weekly time frame, this one looks very similar to the S&P 500. Okay, we have a new high in February. Okay, and it was very similar story. You can see the high was only marginally higher than the high before it, and the market turned negative. For 4 consecutive weeks, the market has been closing on negative basis, and we don't see that the bottom is, we probably will see a near-term bottom, but I think the overall story is that this may be getting ready for a bounce before it unfolds to take out the most recent low here at 19,110. So this is my outlook. I think the overall picture does suggest that we will see a bounce, but this bounce, I'm not going to buy this bounce. That is definitely not something I will consider. But if I want to consider counter trend, I may actually looking out for reaction if the markets started to lose momentum to the upside and starting to show sign that it is losing momentum. Then I may want to join the market on the short side in expectation of an equality move to the downside. Okay, depending on how far this thing can bounce. Okay, this in the coming week, then I will be looking out for weakness. In a daily time frame, this is how it looks like. The market has been coming off, and this is even nearer to the point of invalidation. Earlier on, I did show you the S&P 500 chart, right? The daily time frame is something that we have to be concerned because it does look uncomfortably near to the point of invalidation. But as far as the national is concerned, it's even nearer. Okay, so at some point, if this market does not hold above 18,603, okay, it could be one of the first market to go to actually negate the bullish outlook and turn bearish. So the first index to go into a more severe pullback may likely come from the Nasdaq 100, followed by the S&P 500, and then the last to show that will be the Dow Jones. But if the war in Ukraine should escalate, this thing can change very, very fast. Because if the war escalates in Europe, more capital is going to flee from Europe, and when they come over into the United States, it will find its way into the equity markets. So do look out for that possibility. So on the 4 hours time frame in the at Nasdaq 100, we have a bit of a bounce, but this bounce is still very tentative. It's not strong enough, okay? Because in the other index, we don't see after the initial bounce, the market pull back so deep, okay? So here we see that the market is not as strong. So the National 100 right now is the weakest link among the major equity index. Just be aware of it. Over in Europe, we can see that the DAX has actually benefited from what the new chancellor is saying. Okay, he's saying that he has already won the approval to spend more. Okay, and market like straight away equates that to more economic activity, although it is for a war economy, because after they see how the United States behave, trying to negotiate a peace deal without the participation of Europe, Europe is beginning to question how reliable the United States is as an ally, and now decided that they would have to build up their own defense after neglecting it for so many decades after the war. They have been basically resting on their laurels thinking that United States will always be there for them. Now they realize that under Donald Trump, United States is no longer a reliable partner, and they have to start taking care of business on their own. Okay, and Germany, this is something that should cause a lot of people to be very uneasy, because remember, World War One and World War Two was caused by Germany. So if Germany rearms, will that lead to a situation in which they will once again be a very militant country? Okay, history has not been kind. We have seen how the Europe have never been united, so it's very unlikely, with Germany now taking the lead, to rearm. Okay, with France playing the making a lot of headlines about how they should all reunite and make sure that Ukraine do not fall. Okay, and this has always had the support of United Kingdom. Now UK has already left the EU. Now there are talks that the UK under the current Prime Minister may be actually trying to attempt to rejoin the EU. Okay, because you do not want to be the last guy standing outside if the game in Europe has changed. Okay, so I think they want to be in the game. So don't be surprised if the UK rejoins the EU. But at the end of the day, I don't see how this story will end up as a happy ending. Okay, so Europe is going to be a big battleground, and I have very little hope that this war in Ukraine will lead to any kind of lasting peace, if any. Okay, so going forward, as far as the equity markets in Europe is concerned, currently they are very, very strong. There's no sign that the market has hit a pocket just yet. Okay, in fact, when you consider Wall Street and the European equity markets, you can see that European markets are actually a lot stronger relative to what's happening in the States. When we look at the weekly time frame, we are also seeing the same thing, right? This is what we are seeing. The market is so strong that last month we have an all-time high at 23,474.4 in the German DAX. Short term is the same. This is the daily time frame. There was a bit of a pullback, but Friday was very, very strong. And I think based on momentum alone, this high here may be at risk. 23,474.4 may not be the high for this round. I think there's momentum behind it, because this market actually reacts on the idea that Germany has already won budgetary approval from the Green Party to spend more. So this will open up wallets, and definitely we will see a retooling of the German industrial base, gearing up to produce more weapons. Okay, so this is something that we again have to watch. Economically, that will be good news, but everything else does not appears to be good to me. Okay, over in the this is France. Okay, this is the CAC 40. Also quite similar story. We can see CAC 40, which is the French index, has been doing very well. Again, fresh all-time high this month. Okay, so again, we are beginning to see a pattern here. Stocks in Europe are getting stronger and stronger. Okay, because all this expectation of increasing military budget, okay, is definitely seen to be a positive for the economy. Okay, so not only do we see that in the DAX, we also see in the CAC 40. We also likely to see the same thing in the stocks, Euro stocks, which is a combination of German and French companies listed. Okay, you can see that the story is the same. They're all at all-time high. In fact, this high has not been reached. I have to adjust this high. This is an all-time high, 68.5. So again, this is confirmation that Europe is doing relatively well compared to the Wall Street. Now, the question here is, will Asia also follow? Okay, here in Asia, we look at the Nikkei 225. Nikkei, as far as we can see, is in the consolidation mode. It has not been able to do well above 40,000 in the Nikkei 225. So here we have 3 weeks in which the market has been struggling to get higher, 3 months to get higher. It has not been able to do that. So the year started off at a high, 40,608, but since then the market has been trading lower. So definitely we are seeing a bit of a headwind in the Japanese equity markets. So the market will have to get used to the idea that Bank of Japan is going to increase interest rates, and that is usually seen to be a negative, but the market has already priced that in. So it did not fall as deep as a usual rate cut may entail. Okay, so further sideways consolidation is actually to be expected in the Nikkei 225. Nothing to see here because there is not going to be any kind of wild swing. Okay, because the market physically has been kept at 40,000. There has not been any meaningful advancement above that 40,000 mark here. Anything below seems to be well supported near the 36,000 levels. So again, the range for trading is only about 4,000 points. On a relative basis, that is not a lot. Daily time frame, you can see that the market has been struggling below this line here, which I've drawn previously. Now, this was a support line. Now, this line has become a resistance, technically speaking. So, any kind of advance into this line, okay, it's likely to see some kind of resistance going forward. Okay, so the money is not in Nikkei, as far as we can see. If for those of you who are into Asian equity markets, maybe the money is in Hong Kong. Okay, now here we have the Hang Seng Index. It has been doing relatively well. You can see market has been doing very strong. You can see there is a three-wave rally, and this three-wave rally has already overshoot, I believe. Let me draw this. This is a three-wave move. Okay, hang on. Okay, it has almost hit equality. Anyway, it was in this bracket before. Last month in January, the market actually hit this bracket of prices between 22,900 to 24,850. So right now we are into this bracket, still within the allowable range for equality move. If this is an equality move, that means the market is getting ready to top out. Unless we have a solid close above 24,800, that will be a different story. Because if the market struggle here and close lower, that means this is seen to be a corrective move, meaning to say that the up move is over. So there's a risk that this three-wave move from 14,600 may end anytime soon. Okay. On the other hand, if we get a very solid closing above 24,850, then that could be a very, very different outcome. Okay. So again, this coming week could be very, very crucial. There's a new question here. Let me see what is the new question. Lily again, though Swiss is increasing interest rates, unlike EU decrease the interest, but the Swiss index do follow the momentum of European continent with the all-time high of its index. Could you please comment on this inverse of interest rates relationship? Now, over in Switzerland, I think there's a different story unfolding. I think the currency, okay, the Swiss franc is again, we will have to look at the competitiveness between the Swiss franc and the euro. Now, the Swiss has previously been packing their currency relative to the euro because they still export a lot more to Europe than to anywhere else. Okay, so if the Swiss franc gets too strong, it could be a problem for the Swiss authority. Okay, but now we have a different dynamics in play. Okay, we have the ongoing war in Ukraine, and if European economies is going to be ramped up as a result of this shift in the industrial base to gear up for a war economy, then again Switzerland is going to see how they can position itself. Not necessarily on the interest rate front, because I think the Swiss franc is not so much a product of interest rate movement for the time being. Okay, that may be the case previously, but I think there are different dynamics here in play here. I have not monitored the Swiss index, so I cannot give you a view just yet. Maybe I can do that next week. Okay, hopefully I can give you a more convincing answer to this question that you just posed. Okay, anonymous here. Asking, will Donald Trump have strong incentive to weaken the dollar? Do you also see this as a start of a dollar decline? Like I said, technically speaking, the dollar is very, very bullish. I was preparing to do a short video clip for a broker in Hong Kong, and I was looking at the index, the dollar index, and it has been very, very strong. Yes, the dollar has been coming off, and I think this is what Donald Trump wants. Trump has always advocated a lower dollar purely for export reason. He wants the dollar to be competitive. So he has always been asking the Federal Reserve to cut interest rates. Like I said earlier on, the Federal Reserve chairman is looking at the numbers for the CPI. Unless he has evidence the CPI number is coming down, and he is unlikely to lower interest rates, and that will mean that Trump may not get what he wants by real interest rate cuts. But the fact that the dollar has been coming down this couple of months, that means he will not be bugging the Fed chairman to lower interest rate, because at the end of the day, he wants lower dollar. Okay, and whether he get a lower interest rate, that is obviously something that is still out in the open. Nobody knows whether the interest rate will come down, because I think the concern for inflation is very, very real. And with all this tariff war going on, consumers are already privately thinking that this is not going to be a situation in which the prices is going to stay low. In fact, they have the fear that inflation is going to come back in a very big way. Okay, so if that's the case, there is no way the Federal Reserve chairman can cut interest rates. So I've also put up a post on my Facebook saying that perhaps Trump may have another game plan if he wants interest rates to come down. And that is a big one, because the interest rates that the US pays to service their 36 trillion dollars of debt is about 3.32% last year. So 3.32 on 3.6 trillion of debt is a massive burden. For the first time in US, I think they are paying more than $1 trillion in interest just to service the massive debt. So it is to Trump's advantage if the interest rate can be cut. Okay, because right now we can see definitely Trump administration is in the process of doing cutting the budget. And if you can cut the big budget off because of interest rate being lower, that will be a good sign. So I think there is that possibility that dollar will continue to trade lower. But again, on the flip side, because of this escalation in the tariff war, interest, the dollar may actually gets higher. Okay, so there is competing force here, in the sense that the dollar will react negatively on the escalation of a trade war. On the other hand, any expectation of lower interest rate may not come about until June. Now we are only in the middle of March. June is a long way from now. Anything can happen between now and then. Okay, and there is no evidence to say that the Fed will actually be cutting interest rate come June. Again, everything will be dependent on the data set that we are going to see in the next few months. Okay, so again, look out for all these known unknown. Lily is also asking, China also tries to use the weak currency to combat the trade. Yes, and what strength of dollar yen could impact the situation in the equity markets. Now, China have no choice. If you are a target market of a tariff, logically your currency will be weakened, because if US starts to impose tariff on a country, that country currency will weaken. It is to be expected, because speculators will take advantage of the fact that you are a subject of an attack, and they will attack your currency as well. So China has always reacted the same way. They have been trying to keep the economy going without tanking their economy. So they are doing it very incrementally, okay, by relaxing the reserve that the bank must maintain in their books to keep liquidity going, and as well as not to cause a massive flight of capital. Because if China starts to cut it to weaken the currency aggressively, you can bet there will be a increased outflow of capital from China. Okay, so I think the Chinese authority is also very concerned that if they weaken their RMB too much, it will actually have a negative impact. Yes, TZ, I'll be talking about Bitcoin when I come to it. Just be patient with me. All right, and let's continue with the overall outlook. I think this three-wave move in the Hang Seng could possibly point to a temporary near-term top, okay, unless we get an acceleration above 24,850 and a close above that, then that will be a different structure altogether. The perfect outlook will be this, okay. What I think will be very positive to the Hang Seng is for the market to actually rally more aggressively. For example, let's say if the Hang Seng managed to rally, okay, to 28,500, that will be a different story because this will be part of a potential five-wave rally. And if it is a potential five-wave, it will lead to much higher prices overall in the Hang Seng. Okay. There's a new question here in the Q&A. Let me see, what is that? Lily is asking, with the scenario of the trade war and the unlikely of cutting interest rates from the Fed, is it likely that the retracement of US market in overall might be continue another 3 months till June? What do I think? I think the danger period is actually May. Okay. By all account, we can see that just hours before I came on this webinar, I've been listening to a lot of commentaries in terms of the chatter. There are military planes up in the air, not only United States, not only NATO, but also Russian. And these are not just ordinary planes. These are nuclear bombers. They are flying, and there are a lot of static. There's a lot of communication, communication, and this is not a very good development. Okay, something may actually happens to have all these nuclear bomber up in the air. Okay, and it's never a good development. So what I think is that we may not even have the luxury of waiting to June. Okay, something bad will happen from now to end of May. That's my concern here. And I'm looking at the escalation in the war. There's a very high likelihood we will not get a peace deal between Russia and Ukraine. And God knows what Donald Trump is going to do, because he feels that his reputation is at stake now that he has taken ownership of pursuing a peace plan between these two warring states. If the Russians don't play ball, there is no saying what Donald Trump is going to do. Will he be imposing more punishing sanction on Russia, which may in turn anger the Russian? As of what we knew hours ago, the US has actually been pounding Yemen as far as the Houthis are concerned. So this thing could actually gone from very bad to very, very bad, So I'm thinking something not so much on the economic front. I think it's going to be on the geopolitical front. Okay. Anonymous is asking, if the war escalates, what should we position ourselves from now to June? Gold. Gold is moving already. Okay. I have been talking about gold for a long time. And this past week, you see gold at new high, touched $3,000 per ounce. And I think the market is just nervous. Follow the money, because if gold can break new high, it means the market is preparing for something really severe. Okay. So is it too high to buy? I have no idea. Technically, maybe we are hit the top for now, because we are beginning to see some short-term movements on the downside. But I think technically speaking, this market has a lot more to go. Okay, buy the dip if I'm you. Right. What about talking about currencies? Let's talk about the euro versus the dollar. Now, euro dollar, I don't want to talk about. We have seen a very strong move this week. This is the euro dollar. Now, finally, euro dollar has hit a bottom. Now, this is a three-wave move, right? This is an equality move. Market only exceeded this low here, this target here, 101.91 by just a touch. The low traded 101.78, and the market had a very strong week. Okay, this is a very strong move. Okay, since the start of March, we can see the euro has been very strong, and this has led this one move the week before. Okay, is a result of what the new chancellor of Germany is saying. Okay, he's very vocal, and he wants to, like I said, he's retooling the economy for a war for a war footing. Okay, so this has caused the return of the bulls in the euro, thinking that this is all good for Germany, it must be good for the currency, right? So again, this move here last week has accelerated the decline in the dollar. Okay, but when you look at the overall picture, this market is a bear market. The euro is a bear market. So at best, okay, what I think may happen is that we probably will see a near-term rally in the euro. So instead of this, now I'm looking at it from the other perspective. A three-wave bounce starting from 95 cents to here. Okay, 95 cents to 120, wow, 112.75, and then pull back to 101.78. So if this is equality, there's a possibility the market be regarding 119. Okay, where we are right now is 108. 119 is at least 1,000 points away. So this is in the larger scheme of things on the weekly time frame. If we do get a very steady rebound in the euro, the market could be going higher. That means do expect the dollar to weaken over time, okay, as this market do a three-wave bounce. But this is a bounce within a very, very bearish market. I hope the market can bounce because overall, I'm going to be selling euro once the market lose momentum. I'm going to hold euro for a while because I do believe the dollar bull story is not over. There's every likelihood at the end of the day, the euro is going to collapse. Okay, this feel-good story about Germany and the euro is to me not sustainable. Okay, so I will be looking to eventually reposition myself on the short side, but I'm not going to stand in the way of this current rally because this rally here is based on the momentum as a result of the new Chancellor of Germany now agreeing to spend more money. Okay, he's going to open up the wallet and spend. Okay, they are talking about spending $800 billion to get ready for an escalation in the war in Ukraine. So this is big money. Meaning to say there is possibility we can see further strength in the currency and further weakness in the dollar. I see there are new questions coming up. Lily is asking, gold is now unlimited sky, and April should have many volatile in the market and push to go even higher to 3,003, 3,005. Yes, incidentally, that has been the target for Goldman Sachs, okay, saying that gold near-term target is about $3,300 to $3,500 per ounce. So, okay, of course, I think they are talking about the COMEX gold, okay? So make sure you are referring to the right market here. But overall, I think the underpinning for gold is still very, very strong. Okay. So here we have the euro remains very, very strong. Near term, however, if we do get a bit of a pullback, get ready to get in. Okay. What I mean here is that on a 4 hours time frame. Okay. 4 hours time frame, this is what I see. Okay, there's a bit of a possibility of a pullback. If the market ever gets into or to test this low here, 107.70, okay, this could be a good area to pick up some long position to join the rally in the euro, because in the lower time frame, such as the 4 hours, this is a very bullish market. So this is pullback. It could be the last call before the market resumes its rally above 109.50. Okay, so the market ever pulls back to anywhere near 107.70 or anywhere between 107.70 to 107.90, for example, this could be a good period to look for signs of a reversal and to position for the move to the upside. Now, if you do this trade, make sure you also refer to the lower time frame, which is the 1 hour. If this market actually comes into this area, okay, this will be the area to watch. This is the 1 hour time frame. Okay, all points to 107.70. So if we do see a 107.70, that would be the ideal price to get in on the long side, in my opinion. But again, you have to make sure you tighten your stop, because overall this market, although it's strong, but you don't want to get caught just in case the market accelerate to the downside. I think there's another new question. Okay, no new question. I will continue. So I'm turning bullish on the currencies. So do watch out for further strength. Okay, if the market pulls back further on Monday, look for levels to get in if you can. Okay, in the sterling, sterling is also very strong. Okay, near term you can see there's a bit of a bounce going on. But if you look at the overall time frame, this is a very bearish market. So the sterling is going to be in the same story as the euro. I am not long-term positive about these two currencies. I think long-term, either the euro, at the worst case, will actually disintegrate. UK sterling pound will not do any better. So long-term, over the very long-term, I think these two currencies will be at risk. But for now, we can say that this market is actually very, very strong. There's a possibility, based on the weekly time frame, further gains can be had in the immediate future. Let me join this together and let's get a sense of where the market potential is. Assuming the low here is 103.60, okay, we have a bit of a bounce here at 121. If at the most positive, we may see a move all the way back to 151. Okay, meaning to say, come back to here. Okay, so where it is right now is 129. So 151 is even more lucrative than the possibility in the euro. So if you have to long either of these two currency, I think a better bet would be the sterling rather than the euro, because in terms of the range available to the target, I think it's a lot more, because just now I did mention there's only about 1,000 points possibility in the upside in the euro, but when you compare to the sterling, 129 to 151, that is more than 2,000 odd points. Okay, so it's more than double. So this could be a better bet compared to the euro. Then we look at the dollar Canadian. Okay, this is interesting because dollar Canadian remains very, very bullish. This is the monthly time frame. You can see the overall strength in the dollar is very evident here. So we have 2 months in which there's a bit of a what we call it. There's a bit of a resistance going on here. So this is a bit of a pullback. Possibility we will see further loss. Now this is the weekly time frame. Using again the simple three-wave pullback possibilities, we are looking at a move that potentially may be targeting 139. Where it is right now is a 143. 143 to 139, there's a good 400 to 500 points possibility here. Not a lot when you compare to, let's say, to sterling. Okay, sorry, 145 to 139. It's quite a bit. It's quite a bit actually, because it's quite a bit here. So again, this has been an overall bull market. This pullback is seen to be a correction in the dollar story. When we look at the daily time frame, you can see that this move here, we possibly may see a pullback to challenge a 141.5. And what happens after that remains to be seen, whether the market will take out this low and extend lower. Quite possible, but for now, I think there's a possibility that near-term support is going to be somewhere around 141.5 to 142. Okay, so if the market do pull back, be aware of buying interest re-emerging within this bracket. Dollar yen. This is dollar yen story. The dollar yen story has been, dollar remains very, very bullish. So the yen strength actually comes in, but it has been not be consistent. The market looks like it will do this ABC move here. And if this is the case, on the monthly time frame, I think there's a possibility of further dollar weakness. Okay, they all point to dollar weakness. Okay, whether you're looking at the euro, sterling, or the dollar Canadian, or the dollar yen, it does appear that the dollar decline story is still very much in play. Anywhere between 131 to 136.5. Okay, if the market goes into this bracket of prices, that could open up a buying opportunity. In the daily time frame, this is what we are looking at right now. This three-wave move from the top. Right, you can see 136.5 is the nearest target. And if this is actually done, okay, meaning to say the market have taken on 137.24, then we could see continued weakness in the dollar. So this is referring to the dollar versus the yen. Now I have no other currency pair to show you. Maybe I'll show you the dollar Swiss. It should be the same story. Okay, Swiss story has been less volatile. It has been more or less sideways. The market has been locked within 83 cents to $1.03. So this about 5,000 point range has been where the market has been trading of late. It has been trading this range quite some time actually. Since when? Quite some time. So anyway, when we look at the nearer time frame, such as the daily time frame, there's a bit of a support coming in. Okay, so this bounce that we see from the low here at 83 cents now has hit a pocket at 92 cents and has pulled back quite significantly. Last week we see a bottom at 88 cents thereabout, and if the market do break below 87 cents, okay, we will have to eliminate this rebound. And the market right now is under this big box, which is the pink color box, which is telling me the market overall is bearish. So this is again suggesting lower dollar rates. Okay, so we get the confirmation from not only the majors, we are also seeing it in the Swiss franc as well. Do we see elsewhere? I want to take a look at dollar Sing. Now, I do not trade dollar Sing, but I check this to keep an eye on where the dollar is heading. You can see that this is dollar versus the Sing is bearish against. So if you hold on to Sing dollars over time, you should be able to make more money compared to the others. So Sing dollars is still a good currency to hold because it's very strong. Okay, and this is based on the weekly time frame. On the daily time frame, for example, I think the strength is going to come back in a sense that the dollar likely to continue to fall. The lowest we have seen so far last year is 127.90. So where we are right now is 133.30. Okay, 133 has been very stable for Sing versus dollar versus Sing. Okay, but if the market should trade lower and take out 127.90, that means say that the US dollar is going to tank. Okay, so whether you want to hold on to Sing dollars or want to hold on to ringgit, which has been the star performer last year, remains to be seen. Okay, this year the ringgit has not been doing as well. Okay, but on a relative basis, the Sing dollars has been very stable. Okay, let's move on to gold. Gold is going to be a market that we have to watch because gold has been on a tear. $3,005 was the high this past week. Okay, it is an all-time high. The target is anywhere around 35,000, 3,500. So for people who says that spot gold possible is going to trade to 3,003 to 3,005, it's possible because I have a projected target based on the monthly time frame at $3,500. So that will means there is a massive outflow of capital into something tangible. Okay, although gold do not fetch interest, but it is a sign. It's an asset class whereby people will actually want to hold on to in times of uncertainty, extreme uncertainty. Okay, so the fact that gold is at all-time high is telling us that the market, the smart money has actually been parking some of their money into this precious metal here, even though it has no interest, it has no yield. Okay, but I think they are looking for safety rather than making money. So on the weekly time frame, you can see that this escalation in the gold market is accelerating. Okay, for 3 weeks in a row, this market has not been able to break the new high. But last week, we have a very convincing breakout of this recent high, which before this new high, here was $2,956. So now it has broken out of it and is getting ready to hit its immediate target, which is at $3,018.50. So I think by Monday, we should see this level because based on momentum, it does look like the buyers in the gold market is still very much in play. In the lower time frame, is there any possibility of a pullback based on the 1 hour? Okay, if you're looking at the 1 hour, we can see a bit of a profit taking going on. So if this develop in a 3-wave, buy the dip because I think it's going to go back up again. Okay, but again, when you look at buying the dip, look for the pattern. Okay, if this market result in this move like this, you got to have a target. And using the AB equal to CD kind of measurement will give you an equality move. And how I do it, I always has been depending on the Fibonacci expansion indicator. For example, I put the high here is already known to me, the low is known to me. What is unknown is how much can it bounce. Now, assuming that the bounce can only result in this high on Tuesday at $2,990, I get an ABC move that suggests that there's a possibility market may move below $3,000 per ounce, targeting anywhere between 2,960 odd dollars. Then that would be a good area to watch out for. The market goes into $2,960 or $50, that could be a good area to look for buying possibilities. Okay, what I think may happen based on this time frame is anywhere between here to here. You see there's a gap here, right? So this gap here is actually quite wide. This high here is $2,952 to this bottom here, $2,966. So anywhere between these two extreme points here could be where the market finally rests. So if we're going to see a pullback, okay, do not sell this. I am more in favor of buying the dip. There's a couple of questions here. Let me get to those questions quickly. Heard that China is going to have huge stimulus package. Well, I think the Chinese has been very cautious. They do not want to show all their hands. They are now, I think, in a situation in which they want to see what more Trump will do, and they will respond appropriately. Because the last thing you want is to do the stimulus package, and the market is saying that there will be none. No, what you do not want to create is a situation in which you tell the market that this is all that you are prepared to do. So the market may react positively on that stimulus package if you roll it out. And then if the market conceives that you have no more stimulus package coming, then it will have a negative impact. This is the last thing the policymaker in China will want to see. They must give investor the illusion, okay, or the feeling that they have a lot more behind them. They have not fired the last bullet. Okay, so I think China is going to do it in a very measured way. They are not going to roll out a big stimulus package, okay, unless the tariff war escalates to a point where they had to do something convincing. For a time being, I think they are watching for Trump, okay, to see what else is he going to do. Because during the interim where Trump was not in power, the Chinese has been waiting for him to come back. Okay. And now that he's back, China is not about to show their hands all in one go. I think they're going to be responding to these movements, to this response. People are looking for Aussie dollars and dollar Kiwi. Okay. I will run back to currency and show you the Aussie dollars. I think the Aussie dollars is an inverse lah. Okay, so here I want to show you the weekly first. Okay, the weekly see a bit of a bounce. The lowest is 61 cents. Okay, we have a high of 64 cents. The market is starting to do that bounce. Okay, so in the meantime, there's a possibility that what we are seeing here, the Aussie is not the strongest currency so far. Okay, so this, remember, this is the weekly time. This is the weekly time. Oh. Okay, here. Now, assuming this is a three-way bounce, the nearest it can go is 65 cents, where it is currently trading 63 cents. So not a lot of movements to the upside. So if I'm going to be looking to do Aussie, I will still be looking to buy, but the upside potential is not going to be huge. Okay. Here we have a three-way pullback, which did not quite hit the target at 60 cents. The lowest was 60 cents, 60.8 cents. Okay, not close enough, I would say. Okay, but for now, there seems to be on the weekly time frame, okay, a possibility of a bounce to the upside. Target is at 65 cents. So this is based on the weekly time frame. On the daily, you can see that the market could be doing this. There's a bit of a channel, price channel. So if we do this three-way bounce, 65 cents is going to bring the market to somewhere here. And if that's the case, these pink color boxes will all have to be erased, reflecting the near-term bounce in the Aussie. But upside is going to be quite limited in my opinion, because if this price channel is going to be where the market is going to be trading, even with a three-wave bounce targeting, let me do the three-wave bounce for you. From this low, notice that 65 cents is only about here. Okay, but I need the market to close above $64.30. No, 0.6430. Okay, if it can close the close convincingly above 0.6430, then the target for me will be 0.6510 thereabout. Okay, that will be the immediate target, because that will be a three-wave. So when it all depends on when it get there. So based on this trajectory, this is where the target is. This is where I think it's going to be the interesting point. All right, somewhere here. Three-wave bounce, hit 0.65, and still be kept within this price channel. So immediately, I think there's a scope for buying, but that is for near term. Now let's take a look at the Kiwi. Now the Kiwi expecting a quite a horrible GDP estimates. Remember, this coming week we're going to see some kind of a GDP for New Zealand. The bounce here has not been very strong, but it appears to have hit a bottom here. Now remember, the previous low here is 55 cents. The low that we saw the week before was 0.5516, close. That means this is a double bottom. So near term, there's a possibility of a bounce, but this bounce is possibly a dead cat bounce. Okay. Now, unlike the Aussie, this three-wave pullback hit equality at 65 cents, 56 cents. So this down move here is over. So it does suggest that with this double bottom in place, near term we could see a bit of a bounce. Let me show you the 4 hours. Okay, this bounce here. Okay, now if you take it from the higher time frame, this low here is going to be interesting. Okay, if we do get a bounce here, target immediately is about 58 cents. Where it is right now, 57 cents, 0.5740 to 0.5830. So less than uh, it may not be worth a while to buy the Kiwi here. So if given a choice, even though I think near term we should see a bit of strain in the Kiwi, it's not a currency I want to be buying. The same thing goes for Aussie dollars. Okay. Anything else before we go further? Lily is okay. Do I see KLCI? I haven't been checking the KLCI of late. Maybe I can do that for you next week, based on TradingView. But I do read reports that there is a lot of foreign funds leaving. So that could also be the reason why the KLCI has been coming off. Uh, okay, I do not want to turn this session into a teachable moment. Okay, I just want to show you AB equal to CD. You can easily go and Google it. Okay, it's a very simple concept. If in a corrective wave, usually it's a three-wave move. AB represents the first wave. Then we have a bit of a pullback. Okay, and if there's going to be a resumption of the initial leg, okay, it should be of equal distance. Okay, so AB is the entire distance traveled. So if you extrapolate it and you up AB, for example, and up ABC, then the first up leg representing by the total distance traveled in A to B should be extrapolated to C, which is the lowest of the pullback. The D is where the target is the equality move. Okay, so basically it's a very simple pattern which you will see very often. Okay. Lily is asking, China learns from US Fed playing around inflation rate in the past and interest rates cuts for influence of the market and let the investors have illusion and expecting with the stimulus package. I think it's common sense, okay? If the whole world is looking to China to roll out a bazooka, okay, because they expect China to do something major, but China is playing the long game, okay? China is not going to be drawn into responding to everything that Trump is doing. It all depends on what kind of things that Trump is going to roll out. So because if you show all that you can respond, the market will have a different perspective. Is there any more that you can do? And if the market conclusion is that you have used up all your bullets, then the next thing that you do will have, even if you do it, it's not going to get the right impact. The market is going to go against you. So I think that is quite logical. Okay, you don't show your enemy everything that you have. In this big power politics, it's like playing poker game, right? You got to put up you got to put up a poker face. You cannot allow people to second guess what you want to do. Okay. All right. Yeah. Lily is saying that Kiwi and Aussies are weak. Yes, they are weak. Okay. Currently, the Kiwi is actually quite weak. Okay. Gold, silver, which one is better? Okay, have already shown you gold. Silver has not reacted in any major way. You know? So this is the silver market. Okay, on the higher time frame, this is a three-wave move. Okay, which has so far been underperforming against the gold. Okay, so if this is a three-wave move, top side immediately is about $36 per ounce. We have seen the high at $34.85 for silver. So top side is going to be less than $1 away. So it's not going to be a lot of movements. Okay. Of course, the market may not stop at $36. It may go all the way to $40.37. Okay. And still not change the overall bearish outlook on the monthly time frame. Okay. So silver is underperforming big time. Gold right now is where everybody wants to go in. Okay. But eventually silver will catch up. Okay, so while silver is underperforming right now, overall direction suggests that things may be changing. Okay, here in the weekly time frame, we have a bit of a counter trend move in development. So we need prices to be kept below $34.85 for the three-wave pullback. Okay, here again, the three-wave pullback could be measured like this. For Lily, this is what I mean by A, B equal to CD. Assuming this is A, this is B, this is the first leg of a potential corrective move, and corrective move usually are three-wave. Now, assuming this corrective move is unfold in a three-wave pattern and it is symmetrical, meaning to say the first leg of this move from $34.85 all the way down to $28.74 represents the entirety of this move here. A three-wave pullback, if there's going to be a development of a three-wave, assuming this is the high, you just take this high here, minus off the value of this entire distance, you should get $27.95. Okay, so this is the equality. This is 100%, right? AB equal to C versus D. Okay, this is the ABC move. So based on what we see in the silver market, near term there should be some kind of a potential resistance ahead. Now that could change if prices surge beyond $34.85. Then this ABC is already over. It's not going to be ABC because ABC means this high will remain intact. This high will survive in the current rally. But if it's taken up anything higher than $34.85, then this is not an ABC. This is something else. Okay. So based on this, top side is quite limited. If you look at the daily time frame, the same story. We're getting very, very close. You can see that this is a shaded area in which I think this is what we consider to be a very deep retracement. So if I see this, I am more likely to be selling inside this bracket. Okay, because this is very low risk. If I sell, trading against the trend, if this turn out to be ABC, I stand to win from this move all the way down to the equality move, which represents this potential here. So if I believe this is a potential three-wave pullback, then I want to be selling anywhere inside this shaded pink area, okay? Because that will allow me a superior reward, targeting $27.90, for example, for a risk of less than $1. Okay, so if I believe this is a three wave, I'll be more inclined to be selling rather than buying. But do not try to sell precious metal because I think that is very dangerous play. Okay, I think there are more questions. Okay, I think that is it. Lim Sun Bak. Okay, Dennis is asking, gold, silver, which one better? Hopefully I've just answered you. Now, Lim Sun Bak. Solana, thank you very much. Something that I want to show you. I've actually taken a position in Solana on Monday. Let me show you Solana first before I forget. This is Solana. Okay, this is one of the blockchain. Oh, come on, so much. Bloody hell. Only anyway, let's start with the weekly time frame. Okay, you'll notice that this week is not over yet. We still have a few more hours to go. But before coming into this webinar, it was looking good because if this market has ended somewhere near the top of the range, it would have been a reversal signal. Now I'm not so sure. Okay, but I have already gone long. So basically, this is a very bullish market. Market pulls that very deeply into this darkened blue area, which is a very deep retracement. Okay, and I decided to buy near the 130, $131. Okay, token because this is at 88.6%. So anyway, I am near term bullish cautiously. So this is the weekly time frame. Okay, like I said, this bar would have looked a lot more positive. We have a few more hours to go before midnight, and hopefully we can see this price goes back up to test the upper end. Then that will be a key reversal signal. Okay, you notice that I'm actually going to buy, right? So you can see that I would love to see the market going up higher, but for the time being, on the 5 minutes, it does looks like there is a bit of a sell-off going on in Solana. I want to show you the daily time frame. The daily time frame is still a bit too premature to conclude that this is the first down serious pullback after the market rebounded from 111.85. Okay, the lowest it traded last week, $111.85. I bought on Monday, and the market has gone up until now. Okay, so let's see how this thing developed. On the 4 hour, this is what I'm more concerned with. Near term, there is a bit of a sell-off. This sell-off has actually accelerated. Okay, you need to say I will have to eliminate this positive move. Now I only have to concentrate on the downside. So this move here has resulted in a big sell-off, at least in the 5 minutes. Now 5 minutes is a very, very low time frame, very fast time frame. It's not indicative of the actual movements, but it gives me a sense of how sharp the move can be. So the bulk of the move actually happens as we were doing this webinar. All right. So 5 minutes is not saying a lot, but it also tells us that there's a bit of a sell-off going on in Solana. Okay, let's move on to the other coins. Typically, I will show the Bitcoin first. Bitcoin has been struggling. Okay, this is the 5 minutes time frame. It has gone negative. Okay, so I would have to eliminate all the positive boxes. So this is a job that I would constantly have to update because the market is moving. So I don't know where the sentiment is. So before this move here, it was actually quite positive. Now I have to uh, to find out where the new fight for dominance is taking place. So now that this is the new parameter. The fight for dominance has moved on to a new parameter. with a bit of a bounce going on. For, don't forget, this is a very, very volatile time frame. Normally, I will not analyze this time frame, but I also keep track of it to get a sense of where the market is heading. Right. So this is the overall. I will know. Okay, this is the new parameter. So I can see that there's a new parameter being formed. This is a counter trend of this down move here. And I can see that we are still in the early stage of this rebound. Markets are just like a wave. They don't come in one move. They come in wave after wave. Okay. So this is the new bottom. So near term, I think Bitcoin have a bit of a bias coming in to take profit on this move here. Okay. Uh, for Bitcoin, for something like digital assets, there is no fundamental, so to say. So Bitcoin overall on a monthly time frame is very, very bullish. So I'm going to look for a level to buy eventually. But on the weekly time frame, it is still very bullish. You can see the bullish is still very much in favor of the green box. So as far as the weekly and the monthly concern, it is bullish. But on the daily, okay, we have to watch out for 66,800. Okay. For the first time this week, we are beginning to see a bit of a weakness coming in. Okay. The market has been on the rebound from a low of $76 and 76,600. Right now it's about 82,700. So we will see how the market behaves before the end of tonight. What's the new question, Annie? Okay. So I will show you Solana. I'll show you Ethereum. Ethereum has been underperforming. Okay. So what we see in the monthly time frame is that we are beginning to still to see continual weakness in Ethereum. So Ethereum did not benefit from the run up in Bitcoin. In fact, it has not broke its all-time high, unlike Bitcoin. So, but now the market is coming back down. So if this is a movement, there's a possibility will it leads to eventually Ethereum going back to test this $885? Quite possibly, because this move here has accelerated. Okay, since last month, this pullback here has been very, very sharp. In terms of closing price, this is the lowest close since December 2023. So this is more than a year low. So this is definitely not a good development for the bullish case. So near term, for the trend, I think there's possibility to see more weakness in Ethereum. Daily time frame. Let's take a look at the daily time frame. Daily time frame has turned negative. Okay, this is part of a negative pullback. Notice that I've also done this potential three wave. The market has already hit equality with a little bit more to go, perhaps $1,663. And once the level is hit, we have to take a look at whether there's any buying interest emerging. So for Ethereum, I think overall picture remains weak. Okay. Uh, Anything else you want to see? Okay, Lily. Lily saying that Bitcoin has a rebound. First wave completed in 5 minutes. In this case of trading, shall we see 15 minutes to be better clear? Normally, I do not even look at 5 minutes. Uh, I do not want to be trading too close to the marketplace, especially for something as volatile as Bitcoin on a weekend. Okay. What I would do is that once I get a sense of where the market is heading, when I look at the daily time frame, I will revert back to the 1 hour. The only reason why I'm also plotting the 5 minutes that I have decided to go in based on the 1 hour time frame, but I would just want to fine tune my entry. okay, using the 5 minutes. That's the only reason I have a 5 minutes chart, okay. I do not make a decision on a 5 minutes time frame, okay. It's very dangerous to do the 5 minutes, honestly. So 15 minutes is of no much better. Okay, so if you're going to be looking to trade, I do not encourage you to look at a lower time frame alone. You got to start your analysis from a higher time frame, ideally in the monthly, the weekly, the daily. Once you see something worth doing on the daily, then I will pivot to a lower time frame. In my opinion, the 1 hour is good enough. But there are times when I'm just in front of a computer, I just want to maximize my entry. That's about all. Right? XRP, will I be taking up my position in Ethereum if it goes down to 800? Okay, at 800, I'll be alerted. Okay, once the price in Ethereum goes to 800, earlier on I did show you the time frame. Did show you the weekly. So this is my weekly time frame. Uh, no, is this? No, I think I show you the monthly time frame. Yeah, yeah, the monthly time frame. If this is a three wave, would it stop at 800? Not necessarily, but 300, 800 looks beginning to look attractive to me. Now, remember, this is a potential three-wave move. And a three-wave move, the target is $100.27. 127, okay? But once the price gets into this blue area, which is 800, 1,000 onwards, okay? I will be very keen. I'll be watching this like a hawk. Anytime I see a reversal signal on the lower time frame, I will take my chance to go in and buy. Okay, but I will not buy just because it goes into this blue area. Once the price goes into this blue area, which is a very deep retracement, I will be an interested party, but I will not pull the trigger. Okay, I need to know that there are buyers in the market before I buy. Okay, so it's very important to also know how to look for that reversal signal, which is something that everybody should know. Yes, I know some of you are looking at Ripple. Where is my Ripple? Ripple is over here. Now, Ripple has also come off a little bit as we are speaking. So this is the daily time frame. Now, Ripple is under a bit of profit taking. Okay. So will this profit taking result in a move back to a $1.40? Well, if that is the case, then that will be very, very attractive. Okay. I've always believed that among all the coins, Ripple is one of my favorite, okay, because it has use cases, okay, and if the price is right, I want to be only holding this coin, okay, not the Bitcoin, not the Ethereum, but I want to be holding Ripple, okay. So right now, based on what we see, this pullback here may eventually come back to retest this solid red line, because before the market broke into new high, there was a period of time following this red line, the market only broke out here and it went straight up to $3.40 before pulling back. And then we have this pullback here, very sharp, all the way down to $1.07. But on a close-to-close basis, you notice that the market did not close below this solid red line. So I'm waiting, okay? Last week, we have a good chance, $1.90. I didn't buy, okay? But once the market continued to dip lower, if it comes anywhere near the red color line here, I'll be looking for reaction. Once I see a reaction, okay, meaning to say I see evidence of the emergence of buying interest, I will be interested. Okay. So based on what we see so far, the overall trend is very bullish. This is the daily time frame, mind you. And in the 4 hours, you can see that the market has turned bearish. We have a counter trend in place from $1.77. So if the market can come back to this area, it will be very logical to look for buying interest. When I say evidence of emerging of buying interest, these are signs. This is a sign that there are buyers in the market. These are signs where there are buyers in the market. Okay, and these are classical reversal signal. Once I see something like this in the blue area, which is a very deep retracement, I'll be a player. Okay, so I'm keeping my powder dry to see that if this result in in a sell-off back into $1.99. That would be a good area to start looking up. Once I see something like this, okay, on the 4 hours, for example, I will be a buyer. All right, guys, I think I have done quite a fair bit today. Another question here is, am I looking to purchase? Okay, am I looking to purchase XRP as a derivative or to purchase it outright to own and to keep for now? I do not have a crypto account. So if I have a crypto account, I may be looking to buy and hold. But in the meantime, buy and hold is actually a good strategy, because if you look at all the coins here, it's just like equity markets. Buy and hold seems to be a very successful strategy. Okay, so one of the things that people say about Bitcoin, never sell. Maybe that is the right thing to do. Okay. All right, guys. I think I have overshoot my timing. It's almost 10 o'clock, and I really appreciate your presence and all the questions that you have posed. Again, I will see you next Sunday. Thank you very much. I do have a copy of the recording if you want. In the meantime, thank you very much, and I shall see you again. Bye bye.